Hey folks, welcome to another market update from Charting Star. I'm Joe. It's Sunday the 22nd of January and we are going to talk about the DAX only. If you want to have an update about the US markets, leave me a comment, and if there are enough of them, I will try to make one in the evening if I find some time. Because as you can see, I prepared like 12 DAX charts for you, and I think it will take a bit more time. Yeah, we will start off with the smaller time frames and then we walk our way through up to the daily and weekly charts. And we are going to start off with the 1 hour time frame based on the cash market. So this is my level chart I was twittering early of last week, and I was mentioning that these red arrows, they mark an area where volume gets accumulated. I'm not talking about overall volume which got traded on that day. I'm talking about order flow. And what DAX usually likes to do is he reconfirms these lows, these bottoms, with a second touch or a third touch at pretty much the same level. It can be a higher low, it can be a lower low, it can be exactly the same level. He did it here the first time at that breakout level at 14,155. He did it here a second time, a third time, a fourth time, a fifth time, a sixth time. And he actually did it just after we made that high here on the 17th. And this could have been because of OPEX that this one was or ended up to be a faker. We came up again, and then on the next day, on Thursday, we gapped down, and we hit quite interesting levels actually. We hit that 76.4 retracement of the all-time high to the low we made in September. We overshot like by 25 points, but that's totally fine for a turning point. By the way, the 76.4 all the way up to the 78.6, this is an area usually where the bears have the last chance to turn that market around. If we jump over these last Fibonacci retracements, we might be in something totally different everyone is expecting, because I think most of them, if you look at all these sentiments from all these brokers, IG, FXCM, or even from the IWAX, they are all pretty bearish. So, and you know, the stock market likes to do exactly opposite what everyone wants. So just keep that in mind. So let's come back to that chart here, and then we run down and we hit that high from above now. That high we made in March last year. After we had that insane rally, after we made the low first, and then we run like, I think in 3 weeks to make that high, and made like over like 1,500 points within days. So it confirmed that high here, and guess what happened on Thursday and Friday? We accumulated volume again. So that might be already done here, and we are running for higher highs again. Just to keep that in mind. We talk about that in a few other charts. So let's hop into this 2 hour time frame futures indication, but the price levels are actually based on the cash market, to make that clear. And I was showing the chart exactly 2 weeks ago, and I'm showing this because I haven't changed anything of this count, because I want to show you that I can be also wrong on some things. And I haven't changed that pass. The only thing I changed here is that channel. And this is actually a great example that Elliott waves are very speculative, and that's why I only consider them up to 10% of my system. Sometimes they help to show you something, or to show you the path it could go for, but as you can see, I was going for the end of wave 3 here, and I was looking for wave 4, which never came. We were running in a wave 3 all the way up here until we hit that high on the 17th. And I'm pretty sure we are in wave 4 right now. even a lot of people don't agree with that. But have a look at that pass. And this is actually a great example how my timing indicator works. Yeah, it worked almost perfectly on spotting that cycle high. And this makes actually 50% of my entire system. I use 2 timing indicators, and the price level actually worked out quite well. I determined here this one with a so-called FIB system, but I will probably make a tutorial later on during this year to give you a better understanding of that. So we can get rid of that pass here. Doesn't want to select it. And what I want to show you is, because we were talking about these bullness and these accumulation levels, guess what happened here on Thursday and Friday? It was pretty much the same thing. So the odds, just considering that we are accumulating volume again, or order flow. And the other funny thing is, once you have a look at the lower trend line here, DAX was basically working the entire Friday on that trend line before pumping up again after hours with the US markets. So that could be another hint that we are actually going for another high before we drop. A lot of people actually see that as an A, B, C, and we are going into the next chart. Let me see where that is. This one here. So this is basically the same indication I was just showing you. It just zoomed out on a larger time frame. It's a 4-hour time frame this time, and just to make things clear for you, I zoom out here. This is a low of September, and then this was our first leg to the upside, wave 2. We finished off wave 3 at the end of November, and then we started that very complex correction as in wave 4 as an expanded flat. We had an ABC to the downside as wave A, blue wave A. Then we had an ABC to the upside as wave B. And then to finish off that correction, we need an impulsive move to the downside and to finish off wave C as wave 4. And that's what happened. And we topped out at mid-December, and we finished off that just before Christmas. And it's also called the 3-3-5 correction. And then our last leg to the upside started. Just before Christmas, we made our first wave. Then we were basically moving sideways in an A, B, C to set wave 2. Yeah, and then we were starting that never-ending wave 3. And I saw a few comments that they see an ABC up here with a very large extended C. I don't really think so, because all these gaps we had in here and that wave 3 never pulled back. And this volume or order flow accumulation, which occurred over and over again. So it was just park, pump, and that's so typical for wave 3. So I'm pretty sure a wave 3 finished up here. And now the question is, did we finish already wave 4 on Thursday with that low we made at 14,902? Or are we going for an A, B, C pattern? I prefer, as always, the black pass. I was twittering that many times that I was going for a quick and dirty wave 4 before that last leg starts to the upside. I might be wrong on that, but since we had a very long-running wave 2, it was like 5 or 6 trading days. This was actually, that would be also another typical example for wave 4. If wave 2 is very long, wave 4 likes to be much shorter and quicker. So it could be done. It hit, by the way, the 23.6 retracement of that entire move on the dot. well, it missed out by 3 points, and then it turned around. It accumulated volume here again, and it pumped up after hours with the US markets. So this could be already a 1-2. We could run already in that wave 3 of that last little wave 5. And the 100% target, it likes to be 100% duplication of that first wave 1, would be at 15,369 if wave 4 is in. And then I think there is this bigger move to the downside coming up. Yeah, this is the alternative, the red count that we run in an A, B, C, and then we run up again. But as I said, right now I would prefer this scenario before turning around. Yeah, the next 2 charts I'm going to show you are some targets which got hit on the bigger time frames. This is a daily chart on the Cetera, and you see here in blue that descending broadening wedge I'm showing since October, and as you can see, we hit that 100% target at the beginning of the week, after hitting the statistical target a week earlier, and yeah, we made now 28.72% since these lows we made in September. That's quite a lot points in like 3.5 months. If you ask me, it's way too much. And at some points, the market needs to consolidate. It's just a matter of time. And here you see that 76.4 retracement. We just overshot that a little bit with that spike. So yeah, keep that level at the 78.6 in mind. I will show you another chart on the weekly where the 78.6 is actually quite important. So the next chart I'm going to show you is actually very important, and most people actually don't know about it. This is a so-called DAX course index. It's actually the real index, and no one is actually looking at it. Everyone looks at the performance index, which is actually fake because it considers all dividends by the companies, and it calculates it in its price levels, and this one doesn't do it like every other index in the world. So it's worth to have a look at this one here, and I wanted to show you that a bullish Wilbur wave here in blue, which hit its target line at the beginning of the week. We have it also on the performance index, but not as nice and not as smooth, and I doubt that we hit that target line in the performance index, but we did that already here. To give you a better orientation, this was the March high. I think at the performance index it's at 49.25, and we didn't even hit with that spike we made on last Wednesday. We didn't even overshot that high out of March. And to give you another orientation, this one here is the 76.4 retracement we hit quite precisely on Wednesday, and the course index is still 2.33% away from it. So to keep that in mind, this red resistance zone, that we actually can make it big, larger, we can move it all to the 76.4, and it also didn't hit all these lows we made in 2021. And as I said, we didn't even get all the way up to the March high from last year. So if the performance index keeps moving higher, keep an eye on this course index. That might be a good indication and a contra indicator if we move higher, that this last push could be a fake one. And we stay with the daily charts, and I was triggering this chart, I think on when we made this insight day on the 18th. That must have been on Wednesday. That was Thursday, that was Friday, yes. And I said, well, every time we had that inside candle, by the way, this inside candle, the whole measured from the low to the high has to be within the whole range of the day before. That is a so-called inside candle. And every time we made this so-called inside candle, we had a larger move in September, twice to the downside. And since the beginning of the year, we had a large move to the upside. We made another inside day here. We had another large move to the upside. And this time it turned out to be we moved to the downside. I gave you here this warning whenever we break these boundaries, this level that was 15,083 and 15,269, expect a larger move to either side, and we made that move to the downside, and it likes to duplicate that whole amount of that trigger candle to the side. And as you can see, we made like that whole range, we made that move to the downside already. So that move could be done, and the funny thing is that we made another inside day on Friday. So this could now pump up all the way up, and that would fit perfectly into my 5-count scenario, considering Elliott. But of course we could also move further down. But yeah, keep in mind, I think there will be bigger moves coming up. Yeah, before we start off with the weekly charts, this is the last daily chart. I was showing that many times before. It's our expanding flat correction as a first leg to the upside, as leg A at 49.25. Then we had that very complex B leg to the downside. It undershot that low, which makes it a flat then. And then the final leg C has to be an impulsive 5-wave structure which needs to overshoot the 49.25 to make it an expanding flat. And we have that already, a 1, 2, 3, 4, 5. And the minimum requirement is already met because we hit the 127.2 extension of wave A at 15.025 and the maximum extension at 15.885 is the 161.8. So whenever that level breaks to the upside, that whole expanding flat correction idea becomes invalidated. Another thing to look for is that RSI divergence in wave C, and we have that already. So, which means the thing is ready to fire at any time. It doesn't consider these little subwaves we were talking earlier about. So it just considers a 1, 2, 3, 4, 5 structure, which is met. We have that RSI divergence, which is negative. And since this leg here is by itself, it needs a little brother or bigger brother, which should start here at any time. And I believe if it won't be January, it should be at the beginning of Feb latest. Yeah, and I'm going to show you the VDAX before we finally start off the weeklies. What you see here is the DAX on the 4-hour time frame up here, and down here is the VDAX, the volatility of the DAX, so it's the German VIX. And as you can see, we marked a low on the 13th of January, and the VDAX started to rise with the index, which is never really a good sign for the index. Because the correlation between these two, always when I think it's up to 80% whenever that happens, there's to be a larger drop to be expected within 3 days. And that's what actually happened. We dropped down then on Thursday with that gap down, and that VDAX pumped up even more. I think and on the peak here we were already at like 12%. And now that VDAX kind of collapsed on Friday with a gap down, and the index didn't even move up by that much. That move was actually expected, because whenever we have a spike in volatility, like starting like from 10% plus, on the next day or the next 2 days, there is at least a back test or a volatility crash to be expected. I didn't expect it to be by that much, but that's what actually happened. And once we hop into the daily chart, you see that very nice running Wolver wave wedge here in the VDAX. Well, it's not a daily, it's a 4-hour time frame. And as you can see, we hit that first target line already. And now the question is, because it didn't really reconfirm that trend line, it just went right through it. There is a possibility that we actually come down here to set a new high, which would mean we should make a new high in the index as well. And what would be really nice, that we set up another higher low here on that RSI, and then we have like a very, very powerful RSI divergence, and it would set up, and I put it here in this dotted line, it would set up a new bullish Wolver wave wedge. There's of course also the possibility that we start gapping higher here, we put our butt right on that trend line, and that we run higher again, but as I said, I prefer that other scenario. So let's start finally with these weekly charts. I got 2 scenarios for you. One bearish one, which I showed you already 2 weeks ago in my latest update, and there's also a bullish scenario, which is a so-called inverted shoulder head shoulder formation, with that slightly declining neckline running at 14,669 for next week. And as you can see, that pattern broke out already without pulling back. And usually, let's say, if that thing is breaking out, there's usually pullback on that neckline and before it continues higher. And what happened so far is, here you see, by the way, that March high from last year that we broke through there, and then we retested that on Thursday. And in case we continue to break out without pulling back, or with a pullback, the statistical target, which is usually the minimum target for that pattern, is at 16,679, and the 100% move will be at 17,499. So, which would mean we hit new all-time highs. Yeah, and the bearish scenario, you know already out of my last video, the bearish cipher. We missed out that trigger level at the 15,342, which is a 78.6 retracement from the all-time high point X all the way down to that point C, which was our September low. I have to say, this is a weekly chart, and we missed out by 73 points. So yeah, don't focus too much on these 73 points on a weekly chart. I consider that thing to be activated, and it could fire to the downside at any time. And I mean, we talked now about so many different charts, and most of them, they give us a deeper pullback, or even like a scenario where we run much lower. And so what you see here is my intermediate cycle chart out of the weekly, and I was showing that also like a couple of times before. And what's quite interesting in here is that we made a so-called right-hand translation for the first time since the all-time high. The last 3 primary cycles we made ended up in a left-hand translation, which means we couldn't break through the previous high, which happened at the all-time high. And in the last 2 primary cycles, we topped out on the second half. We topped out quite early and couldn't even get to that high that occurred here and that occurred here. And this time we had a tiny pullback for 2 weeks, and then we broke through that high quite strongly. So this is actually a bullish sign, which doesn't mean that the bear market has come to an end. Once we zoom out here a bit more, I don't want to show you too much, but you see these red cycle brackets down here, and one thing maybe to mention is these primary cycles, they are measured from bottom to bottom, and for the DAX they usually last between 17 to 27 weeks. So this thing could finish in week 27 with a low. And once we have a look at the cycle brackets down here, the purple one, by the way, is a shifted cycle, which needs confirmation. But from the bracket lengths, it's the same. It's just because this one here in September finished way too early. And that's why we have to consider a cycle shift in the current cycle we are in right now. However, that cycle, the shifted one and the old one, they suggest a low sometime between the mid-May to mid-June. And even this primary cycle here looks quite bullish, which is actually a normal behavior after having 3 bearish cycles in a row. It's actually normal behavior that we see a bullish cycle after that before we continue the bear market. Yeah, so that's one thing you should think about and consider for the time scale. Yeah, I'm done. That's about it. We finished the DAX, and as I mentioned earlier in the video, leave me a comment if you want to have an update for the US markets later on. If I don't find time today or this evening, I probably look for it to do it tomorrow. Yeah, I wish you all the best. I wish you a successful next week and enjoy the rest of your weekend. Thanks for listening and leave me a like. Thanks.